The market continues to chop around as it's consolidating and building energy for the next large move in the market. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, today SPY was down 0.22% as we are continuing to chop around in this trading range, which I am defining as between SPY 390 up to 400. You can see with today's price action, we did come back down to this very critical support zone where all of these moving averages are bunching up, and that is going to be a significant support level right around SPY 395. What's more than likely going to happen is we'll bounce from 395 to reach to the top of the range at 400, and at that point, we're going to see whether or not SPY can break out of the range to the upside, or if we're going to get rejected and come back down to break out of the range to the downside. So in the short term, look for SPY support right around 395 up to test resistance at 400. And if we break support at 395, then we're likely coming back down towards 390. So it's a very simple $5 range between 395 up to 400 down to 390. And if we break above 400, that's the bull breakout to go close the gap at 408. And if we break down below 390, we're likely coming back down towards 380. So there's a very clean trading range, but it can be difficult to trade if you are getting chopped up. So be aware that it is a trading range and then trade it accordingly. And in a trading range, you're not going to get any smooth trending in either direction. On the NASDAQ 100 triple Qs, we were down 0.53% today. And as you can tell, the triple Qs are trending because we do have the bull trend in the big tech companies as long as the triple Qs are above 300. You can see this chart looks a lot different than SPY, and we've been trending off of the lows. But we did find that resistance at the February high at 312, and now we're pulling back down to some critical support right around 305. Now today we did not break that critical support, but it was tested, and of course we did see buyers stepping in. So as long as the triple Qs are above 305, it is possible we are trying to get that bull breakout above 312. So the trading range in the triple Qs is a lot smaller than SPY. It's between 305 up to 312. And if we break 312, we're likely going to 322. And if we break down below 305, we're likely coming down to 300. Keep in mind, the triple Qs have the advantage of the bull trend because we do have the higher lows and higher highs. So we are going to see a lot more buyers stepping in at strong support levels. Unless the bears are strong enough to break the triple Qs all the way back down below 300, we are likely going to see this resolving into a higher low back into another higher high. On the Dow Jones, we were down 0.15% today as the Dow Jones is trying to stabilize around the 200 daily moving average at 324, and we still have a gap to fill to the downside just below 323. There's a good chance that gap will get filled, but we have no idea when, just like we still have gaps open to the downside all the way down there at 311. If we lose support at 324, it increases the probability we go down and fill the gap at 322, and below that we have critical support between 317 and 318, because if we lose that, we're looking for the gap fill at 311. The bull breakout is above 327, which could send us all the way back up to the highs at 335. On the Russell 2000 IWM ETF, we were down 0.14% with the second day in a row closing back over the 5 EMA, so there is the possibility this is no longer just a dead cat bounce. Now keep in mind, we did not fill the gap at 172, so that is still a very likely possibility if we cannot break back over 174. Above 174, we should run to 177, and above 177, we should go close the gap at 181. If we break down below support at the gap fill at 172, look for support at 170. The support trend line down here right around 168, and if we break all of that support, we're likely going down to 164. On the ARKK ETF, we were down 1.5% today as ARKK continues to get rejected around that resistance zone at 39, and we're back down towards some support around 37. Below 37, we test the neckline of support at 36, which could be this double top that could take us down to close the gap below 32. You're not getting bullish until we break back over 39 and then 40.5 because this is a valid double top if we break down below the neckline at 36. On the VIX, we were down 3.15% as we see the VIX getting crushed back down below 20, but this is only day one. And if I drag this box out, you can see we have seen the VIX spending a lot of time below 20 this year. And if you're looking at the triple Qs in the big tech sector, we still do have a bull trend. So the VIX crushing down below 20 for one more day will tell us fear is leaving the market. But fear can come back at any point with all of these headlines and news coming around. So anytime the VIX is above 20, you simply just need to be more cautious because the market will be more volatile. On Bitcoin, we're currently up 0.25% as Bitcoin is trying to find support right around 26,000, and we're still getting rejected below that resistance at 28,000. The bull breakout will be the break of 28,000 to get to our next target at 30,000 and then 31,000, and we're bullish as long as we can hold above the breakout at 25,000. On Google stock, we were down 1.4% today as Google is getting that higher low pullback, which could be anywhere between 98 up to 100. and right now we do see we are getting the bull trend with all of these moving averages starting to cross over to the bull side. So in Google, you want to stay bullish as long as we're above this rising 20 daily moving average, which is going to be that support right around 98. The next bull breakout will be back over 102 and then 106, and then we will be looking for that gap fill at 110 and the possibility to reach the top of this channel. If we break down below all of this support, we need to hold the breakout at 95.6, and below that, we're likely losing the bull trend. On Amazon stock, we were down 0.82% as Amazon did lose the support at $98, but we're still above the other support zone between 94 to 96. So there is a lot of support in Amazon while we're trading above 94. Below 94, it looks like we're losing the bull trend and we're likely coming back down towards 90 and then 86. The next bull breakout will be the break above 101 to 102, and that should easily send us higher to fill the gaps at 109 and 115. On Microsoft stock, we were down 0.42% as intraday we did test the lows of support right around 272, and we did close back over critical support at 274. From here, with this bull trend, there's a good chance we bounce and fully close the gap just above 285. So stay bullish as long as we're above 272, and if we break that support, we're likely coming down to 267. On Nvidia stock, we were down 0.46% today as we did hit that price target I was looking for to the downside, which was this support at 258, but we hit it a little earlier than I expected, and we did not fully test the support trend line. So for that reason, it is possible Nvidia will also have strong support at 256, but if we break 258 and 256, we're likely coming back down to 242. Now this is still a bull trend, and as you can tell, there were buyers off of 258. So if we bounce and start breaking the highs in the 270s, our next upside target will be 282.5. On Tesla stock, we were down 1.37% today, and Tesla did finish the gap close at 186 after the rejection at 197. This is a critical support zone between 183 and that gap fill, so if we do bounce from here, look for a retest of 197. The bull breakout sends us up to 208 and then 215, and if we break down below the support at 183, we're going to be looking for a retest of support at 173. On Apple stock, we were down 0.4% today as Apple is getting the breakout retest of the neckline of this inverse head and shoulders at 156, and this is your risk level. As you can tell, there were buyers of the dip at that level because that's very well-defined risk for long trades, and this is very clearly a strong bull trend of higher lows and higher highs, and all of these moving averages are positively sloping. As you can tell, the 5 EMA is starting to roll over, so the bulls need to bounce from 156 and reach the target at 163. If we break down below 156, look for support around that rising 20 daily moving average at 154, and then below that we have stronger support at 150. On the financial sector, we were flat on the day, going absolutely nowhere, and we did get the second day in a row closing back over the 5 EMA, so it does look less likely that this is just going to be a dead cat bounce. From here, look for a push higher towards resistance at 32 and then 33. The industrial sector was up 0.51%, also continuing the bounce from what looked like a dead cat bounce, confirming it could be something more. So look for a retest of this upside resistance right around 99, and we do have a gap to fill to the downside at 97. On the healthcare sector, we were down 0.6% today, bouncing back down towards the 20 daily moving average around 127, and a bounce from here could send us back up to critical resistance at 129 to 130. The energy sector was up 1.55%, bouncing back over that resistance at 80.5, but going to find resistance right above at 81 to 82. A rejection from any of this resistance could send us back down to fill the gap at 73. Also, don't rule out the possibility this is a double bottom off of 76 while we're trading above the neckline at 80.5. So jumping back over to the S&P 500, the market has been consolidating in a very tight trading range over the last couple of weeks, and we are very likely going to see a break of this range in the very near future. Let the price action tell you whether we're going higher or lower, and just be prepared for any scenario. And in the meantime, just trade the range and take whatever the market gives you. When you're in a trading range, it can be very stressful if you're expecting a smooth trend, so expect plenty of chop until we get a breakout of this range. If you want to trade with other price action traders and get access to all of my intraday updates and analysis, come join us over at the Stocks Channel Trading Discord community. You can find out how to join the Stocks Channel Discord by clicking on the link in the description of this video. I also have my own trade alert service called Bank Trade Alerts that will send you all of your buy and sell alerts directly via email and text message, and only trades the ETFs TQQQ and SQQQ. You can find out how to join Bank by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.